Yeah, hi everybody. Great buzz in the room. Good to see you all. Exciting times all around, and not least of which for Roger Jackson over here, which I'll tell you about in a minute, our first guest. I'm going to do my usual run through of the sponsors and just remind you all that the reason that we all don't pay membership here is because of our wonderful sponsors who basically keep the whole, in raw terms, this is your annual report. It costs $100 at a typical event to either drink you and give you the venue, but it costs us about $200. So the gap is closed by these sponsors, and I just want to go through them, and as I always do, with great pleasure, because you owe it to them to thank them, you owe it to them to take them your business if you can. But Tees, the engineering firm, Taurus Funds Management, Research as a Service, Finola Burke, who's here, thank you. AMAC, the junior company peak body of representation, Kingsgate, the Thai gold miner, Ioneer, the wonderful discoverer of massive lithium in Nevada. Our main sponsors, our platinum sponsors are BDA, Bear Doll Bear. Johnny, I don't know how long you've done this, mate, but thank you. Yeah. There you go. Shit, I didn't make them do that. And AME Group, lost something there. It's down there. AME Group, and going around the other side of the room, we've got RFC Ambrian, CRE Insurance, Vertex, the broking company, the Reynolds sisters, as I call them, but Bryce and Pierce, thank you. New South Wales Mining, and we get also, of course, the great chairmanship of Steve Galilee up here thrown in with that, for which we're appreciative, and APM Graphics, Fender Geophysics. These are the people who put up to make who basically keep this thing going around year in, year out, and I'd just like for you all to join with me in thanking them. It's good to do that. It's good to do that because they make it all possible. Gold. Well, firstly, I might just talk a little bit about what's upcoming. April, we've got Levoto Resources, which is another cycle. Here we go again. Hillgrove, the great antimony gold mine up in near Armidale, but this time the world's in a desperate shortage for antimony and the company's flying. So it's a really big story. May we'll have uranium companies. We might even push that up to a lunch, if we've had, if we get Ted O'Brien, who hopefully will be the actual minister by then. Please send us a saviour. Anyway, I've had quite a lot to do with Ted and introduced him to the uranium miners, and had quite a few TED talks, and he's a great man, so maybe we'll get him along too and put on a lunch. And then June we'll have a coal lunch, and coal lunches always go well. So that's all upcoming. Gold, wow, yeah, where's the party? I mean, we got three great stories here today, and I can remember back sort of early 90s and how excited everyone got about gold. Gold to me was always in a market, was always the party starter. We had a whole bunch of people in the room, and then gold walked in, then it was a party, Given this gold price, which is just insane, you look at it, it doesn't matter whether you look at the 10-year price, the 1-year price, or the 60-day price, she's cranking, And Finola, who's is a reader of Forbes magazine, tells me that I missed this. I don't know how many people picked up on it, but the US gold treasury, which is mostly in Fort Knox, and I noticed that, bless his heart, that Elon Musk wants to allow the American people to come and see their gold. So he wants to actually have a tour where people can walk through, which is really cool, right? It's your gold, folks. Who am I to stop you seeing it? You know, but that should create a bit of gold lust. But 8,188 tonnes of gold is in the possession of the US Treasury. It's good. It's a good sum, right? I mean, imagine. I mean, that might just be about this room, sort of solid chock full. It's a lot of gold. And it's still valued at its 1974 price, apparently, which is, it was revalued in 1974 from $34 to $43 US. There's somebody nodding over there. Someone else knows this story, right? Yep, okay. It's new to me, but it's fascinating because all the Treasury has to do is revalue this gold up to $15,000 an ounce. Sounds reasonable to me, doesn't it, Roger? You know, go from 3,000 US to 15,000. I mean, it's just like stroke of a pen. Why not, right? But if they did, they would actually inflate away the entire US debt. I mean, that's what I'd do for sure. I mean, if it's only like he's got that big texture colour, you know, and all he's got to do is just sign a thing saying the gold's now worth $15,000, no debt. What a legend, eh? That's all he's got to do, right? Exciting times in the US, I must say. I mean, we're all gripped by it, whichever side of politics you're on, but it's sensational viewing, isn't it? You know, every day there are big things happening. Just a little small fact that Will picked up on. Will Jeffries, if you ever do listen to 2GB in the morning, Will does all the current affairs and political commentary for the Ben Fordham show. So he often digs out things. The rest of the day he's in my office. But the hoo-ha about lifting the tariff on Australian metals, iron and coal, we only export $900 million a year to the US in those two metals. So it's not really a big deal for us. And if it makes him feel good, well, I'm sure it won't matter too much. But so very exciting times. Today, now Roger, who is still awake there, mate, this guy has travelled through thick and thin, wind shear on Fort Dallas Airport. I landed the aeroplane sideways, lost his luggage. It's not a great fit, that suit, I've got to say, but thanks for going and buying it this afternoon because you didn't have any baggage. You look great. You know, and he's literally patched all of this together, got into Sydney at 2:30. So what we're going to do, just in case, we're going to put you up first in case you do fall asleep, Roger. I'm sure we won't because you've got a stunning story. Second, we'll go Auric, Mark English, and last but not least, Alexander Scanlon with the mighty Barton story. So these are red hot gold stories and you know, that's all I'm saying is, where's the party? I mean, this gold price is phenomenal. We should all be snivelling our way across the Australian countryside, trying to find, you know, a gold resource that's got 1 0 less than last time we went and had a look, and get out there and find one and do it and produce from it. And it's exactly what these guys are doing. Exciting lineup. Great to see you all, and please welcome the wonderful new suit and Roger Jackson to the stage.
Well, thank you, Julian. Now, that's what you knocked off. You're right, dear. Oh, it's good to be here, I tell you. Sitting in an airport, I guess it's last night. I just didn't think it was going to happen. It was 6-hour delays, and yeah, well, it was 5 flights to get here from Toronto. So, yeah, so it's good to be here. And I must say, I've always aspired to be here, Julian, too. This is a privilege to be speaking to this particular club and these particular people here. Many I know over the years, and I respect this institution, so thank you. So Vertex is a reasonably new company. couple of years old. We took on a project out of, it was a spin out from another company, and we've taken that project and moved it to production. We've had a pretty good run. We've got a little bit of selling at the moment due to people taking a bit of money off the table after our after a con note conversion. So, but anyway, going all right. Good team. Most of us on the board are all either been in mining for a long while or been operational people. We've started mines. This is my third or fourth gig. Got a great team in our management, and basically we are a one pony company. That's all we've got is this project. That's all we want. We've got plenty enough for us with our 35 kilometres of tenements, and our office is at Hill End. There is no corporate office. Everything happens out of there, including our operations.
That suit's going to look great, mate.
Yeah, I don't wear the suit up there. It's redundant when I go to the office. So we've, as I said, our flagship project's at Hill End, which is just up the road from here. It's the closest gold mine to this event. 3 hours from here, or 3.5 hours, and about 70 kilometres north of Bathurst. We've commenced gold processing. We own the project 100%. There's no hedge on our gold. It's a high-grade resource. We've got 225,000 ounces at 17 grams. We've developed this to this point with using about $18 million. We've inherited $25 million worth of underground development. That's shafts and adits and stuff like that. And there's been 1.8 million ounces mined in the area, one of the first areas to be mined. The reward sits just under the famous Hawkins Hill mine, which they mined 435,000 ounces at a massive 309 grams a tonne. Now there's I'll show you the picture of that, but that makes this story quite amazing because we believe there's going to be repetitions of this geologically. The production has commenced on, we've commenced on stockpiles. We're producing as we speak, albeit commissioning still through those phases that you do in commissioning, and we're developing our underground, and we'll be into that in about 3 months. We are the only fully gravity recoverable gold mine in Australia, or at least on the ASX, in hard rock, and we've got a massive system. We've got 25 kilometres of strike on this project. So it's unique. This is the most unique gold mine in Australia. I said the same thing in the US last week, and I had so many people coming up and saying, never seen gold like this. As said, high grade. We've got gold recoveries with gravity, 95%. There's no metals, and anyone that's been in this game normally understands there's associations with chalcopyrite, arsenopyrite or pyrite. No, it's either gold and in quartz or nothing. It's 23% fine, again, quite unique. Most gold mines, gold's not that gold, sort of goldish, but not gold. Ours is gold. That's what it looks like in reality. 23 fine. That's as pure as it gets in actual nature. It sorts. It's one of the best ore sorting stories around. It's textbook stuff. We recover it without a ball mill. Not many gold mines can say that they don't use a ball mill before they process the gold. And clearly, we don't use cyanide. And also, we claim the largest piece of gold ever to be found on this planet. Where are we? 45 k's directly from the largest gold mine in Australia. We sit in the Lachlan Fold Belt. We're in an anticline that's 75 kilometres long. We have 35 kilometres in tenements over that length, and we're permitted. We've stuck to a strategy since we took this company and this project on. We said we were going into production. We don't want to be an explorer and keep drilling. We wanted to get into production. We've done that. We bought a second-hand plant off a company went belly up in Victoria for $620,000. We've refurbished that, mixed it with our plant, put in a lot of other nice kit, and it's set up. A number of the people in this room have been up there, and it's really, really cool. It's very small, but it does the job, and it's very technical. And we wanted to commence mining on our stockpiles in late 24 and early 25, which we've done. Start developing our reward gold mine. My general manager's here today. He's got those guys. We're employing mine managers. We've got mine guys. We've got underground geologists, underground surveyors all starting up now. That's all happening. And we're going to drill. We're going to drill with this area, and we're going to have a good safety and environmental and social governance reputation. And of course, for a couple of you in here, you want to see us build shareholder value, and that's what we're going to do. So this picture here sums it up, and we've got a area here that in yellow which we're going to mine. That's the high-grade reward area. This here is the adit running into it. This is where the gravity plant sits. Hawkins Hill, that's just there. They mine the 10 ounce per tonne dirt. We've got a 260 metre shaft already in there, ventilation and walkway. And we've got an exploration target down here that sits between 12.5 grams and 19 grams. Clearly, the only area that's been drilled is the yellow area. So there's a lot of more upside there. So the plant, that's schematic. It's very simple. We crush, and then we ore sort, and then we put it through a gravity circuit, and then over a Wilfrey table and produce gold dust. And then we can melt the gold dust and make gold bars. We had a lot of existing equipment and set up there, which we've capitalised on. And that's a photo of the plant. It's only small, but it does a great job. And so that's the Gecko team standing up there on the ore sorter. And these are the components we've got. These are the important parts, the Falcons. They're like spinning washing machines. They spin fast and they pull the gold out and let the quartz go out the bottom, and we collect that gold. So we ore sort, and this is great because we can ore sort because the ore body's right. Not everyone can ore sort. And the reason we can ore sort is because the gold sits in quartz. Doesn't sit in the country rock. The country rock's what we call grey-wacky, or let's just call it grey sandstone. It has no gold in it, zero. The other bonus is when we fire or blast the rock, or we put it through the crusher, the quartz really likes to fall off the grey-wacky. So it separates and none sticks on there. And that's why it increases so well. So it either is waste rock or quartz. We'll see here now. So here we are. It's just, this is in the Tomra test factory. I've got ones of our own, but this one's a better video. So this is just the mixture of quartz and grey-wacky between about 10 mil and 50 mil. It goes through the ore sorter, uses laser. Laser tells you whether it's translucent or not. So the quartz is, the grey-wacky is not. Can't see through grey-wacky. It blows air nozzles over, the air blows the quartz over, and the grey-wacky just falls down into the closest hopper. So if we go back down and have a look at what this separates, in the first bag, grey-wacky, no quartz. Go to the other one, this is quartz. Might be a couple of bits of grey-wacky. There's no quartz in the other. That means it upgrades by 330%, and we only lose 0.03 of a gram. It can be, depending on the geology, the grey-wacky to the quartz, but we've had it up to 90% rejection and 10% of the quartz. And what does that do? Well, it means we use less water. It means we make less tails. In fact, we don't call it tails because it's not tails. It's just crushed quartz, so it's sand. We call it sand stack. We don't even have a dam. So we just stack the sand. We can sell it. Boral have already looked at it. That's another story for later, but it's a product of just sand. It means we only do 30% of what we were going to do. But we also are able to take that reject material and put it back into our stopes that we've mined and use it for long hole stoping. So it's a symbiotic thing. It's fantastic. Bring it out, take the quartz out, take the grey wacky back in, put it in the stope, mine up, drill down, drop it down, and go up again. Perfect. Lower power. We run this whole plant off once it's up and running, about 400 kVA. Something you'd fit on the back of a small truck. It's very small. So really light on power. And no cyanide, as I said. It only needs a couple of operators. We've got an app that you can see on your phone that we can run the plant on. So it's fully automated. And it's fairly secure, because that's what most of our shareholders are always worried about, someone knocking our gold off. At the moment we're doing the stockpiles. The stockpiles are in the blue here. Can't talk about the stockpiles too much because ASX don't like us talking about unless it's a resource. It's not a resource, it's just material that was come out that's got gold in it. We're putting it through, that's what we're commissioning with, and that's what we're producing gold at the moment. And it's ideal to commission on until we're up and running fully with our underground operation. So the mine itself, it was mined by Hilling Gold in 2009 and 10, basically as a trial, but they did spend, tens of millions there. Set up a beautiful adit, beautiful shaft. The shaft you can see on the right here's got a ladderway and a conveyance that takes air out, and if there's ever an accident, got a second way out. We've got quite a bit of gear already, and I think Chris signed the order for our jumbos to turn up, which are drill machines, yesterday. So this is the work they did back in 2010. This is the adit, the brown bit here. The plant just sits just where the pointer is now. This is the shaft, 260 metres. These blue declines here are already set up. Our first ore is going to come from there. I think it's going to be a little bit higher grade than what our average reserve is, but suffice it to say we'll mine 17 gram. It'll come out as 12 to 10 after it's been diluted, goes through the ore sorter, jumps up to 30, 35, and then goes into the process. That's how it works. So, as I said, we're going to be mining off this adit. Most of this development's already done. We're just going to go in there and stope it. We're going to use remote control loaders, so it doesn't mean that we have operators on them. And that means we can do long hole stoping. As I said, we're going to backfill with this beautiful return material that we're bringing from the ore sorter and fill it as we go and work upwards through this. This is the material that was based on our PFS. But of course we've got plenty of other material around there, but we've got to only talk about PFS. So we bought our own underground drill rig. We're going to be an owner-operator for everything. We're doing everything. No contractors. It's all about gold. We don't want dilution. We want everyone to be focused and everyone on the same thinking as the company is. Gold makes us the money, not moving dirt. We don't have to move tonnes, we just have to move gold. Same with the drilling. We have to drill for gold, not just drill for the sake of drilling. So we own our own drill rig and we've got our own drillers. And we've got some great targets. Those targets that are underneath us, that we've only ever drilled a little bit underneath the adit, down about 100 metres. We can go 200 metres there or 300 metres and be mining there for the next 10 years in high grade. So it's an ideal place to start, put our own drill rig in and build the inventory up. And of course, that's what's sexy. That's what gets the market going, is putting out beautiful high grade intercepts. And we're seeing that with some of the companies around the country at the moment. They're not mining, they're just putting out intersections, but they've got these amazing market caps. So anyway, we're going to join the bandwagon. We're going to mine and we're going to produce gold, but we're also going to drill, keep drilling. So we've got 34 kilometres of this, what they call the hill end anticline. We put a LiDAR over it. There's 3,600 shafts in Grey Wacky. over that length. If this was anywhere else, it would have been different. If it was in Charters Towers, if it was in Bendigo, if it was in Ballarat, if it was Beaconsfield, it never amalgamated. They did because they had a big English company came in and put the money in, and they put big shafts in, big water pumps, a lot of capital, and they mined those big mining precincts. This precinct never saw it. They were 50-yard leases the whole length, and usually one operator got his 50 yards. Croman, in his 50 yards, pulled out 426 tonnes. He got 24,500 ounces out of it. And there's many more stories like that. But they only got down to about 60 feet. Some of them got 100 feet. So we've got 25 kilometres that we've only drilled 800 metres the length of it. And by what you saw, it's not very deep anyway, that drilling. But those 3,600 shafts have never had a drill underneath them. So we feel that there's some opportunity there. We're just looking at, this is sort of side on view, long sections they call them. This is the plan view of all the old leases. We've got all these leases are together, but they're quite old leases. So we've got sort of 5 or 6 Ks here. And then this area here, about 3.5 Ks, is our immediate target. So we've got Fosters there, which we'll drill. But, you know, when you look at some of these, assays that we've done, and these are channel samples, so channelled every metre, you can look at the grades over that length of, 80 metres. That's the sort of grades that we know that are in our exploration target to drill. So we're not only going to be drilling for exploration, we're going to be drilling this out to make inventory and certain inventory. So here's our gold specimen. So Haldeman took this out on the 22nd of October, 1872. It was 286 kilos. It's the largest specimen of gold ever to be pulled out of the planet, still to date. And it's above where we're working. At our other Hargraves mine, we've had 20 nuggets over 20 kilograms. Most of these, if you go to the Australian Museum, you can see them there. They've put replicas on them. But I've taken quite a bit off this because some of them are... a lot of stories come out of Hill End, and if you can't justify it, you've got to be a bit careful. So to sum up, we've got a very green mine. I think we'd be up there with one of the greenest gold mines in Australia. Gravity recoverable. We don't use ball mill. There's no tails. We reuse the water, and with no chemicals. And of course, you know, we're not slave labour, are we, Chris? We pay our people well, and there's no graft and corruption in our business. So we tick all the boxes with the ESG, and we also are mining gold, and we're going to be drilling a lot more and releasing a lot of very good intersections to the market over the next few years. Thank you very much.
We'll take some questions at the other end. Stock code VTX, beautiful white golf caps down here. There's a bunch of them down the front here that Roger's. Hey, if you lost your baggage, how did you end up with all the golf hats? Oh, good man. Okay, yeah, got it covered. All right. So, I mean, that's a pretty exciting story, and we're going to roll straight on and get the Auric mining story. So, with that, we'll take some questions at the far end. But red hot gold tonight. Next story, Auric mining. Mark English. Please make him welcome.
Thank you.
Welcome, mate.
Well, taking over from that talk, we're the furthest gold mine from this room. So thank you for allowing me to present to you. It's a great privilege. So I just want to talk about a couple of milestones for Auric. We established the business in August 2019. We bought 2 projects in September 2020, one from Mincor Resources and the other from Estrella. We listed in February 2021. At that stage, we were an explorer. It was always our desire to become a producer quickly. We entered into a mining agreement in May 2023. December 2023, we produced first gold, took our first cash. Then we went back in March 24. We completed mining at Jeffreys Find in 2025. We've now passed $100 million in gold sales. Our share of that revenue so far this year to date is about 8.1 million. And we've just finished a big gold grade control program at our major project. So our strategy, ever since we started the business, was select assets that we could monetize. We didn't want to be a greenfields explorer, explore, run out of money, come back to the market, raise more money, go and explore. We wanted to get enough cash out of our business to control our own destiny. So the people, Steve Morris is in the room. Steve's our chairman. He came up from Melbourne for the night. Stephen's been involved in the capital markets in Australia for 25, 30 odd years. I'm a chartered accountant by profession, and John Utley is our technical director. So I've got the right suites of people to run a small cap gold company without being dominated in any particular area. Our structure is pretty tight. We've got around 149 million shares on issue. We've got $8.5 million cash in the bank as we speak today. The top 20 own 55%. So the directors up there own 17%, enough skin in the game without controlling it. We have 3 high net worth individuals that own 22% between the 3 of them. The other people in our top 20 account for 16%. So our market cap's pretty small. Market cap was around 41 million bucks at the 28th of February. I've been doing a roadshow for the last week and I've moved it down to about 30. So where are we? We're in WA. Everything that we own is in this rectangle. So you know where Kalgoorlie is, up the top up there, Super Pit. There's Norseman down the bottom. So the big players in this area, of course, are Northern Star, the Beta Hunt mine, which is owned by Westgold, St Ives, which is owned by Goldfields, as I said, Pantoro down here in Norseman. So these are the Auric tenements. We're mostly now the 2nd or 3rd largest tenement owner on that belt all around Widgie-Maltha. We are going to stay in this area. There's enough infrastructure in this area to keep us busy for the next 5 to 10 years. The Jeffreys Find gold mine, which was our first project. It was small, it was discreet. It's about 50 k's due east of Norseman. So you leave Norseman, heading towards Adelaide, and then it was 14 k's up a haul road. We didn't have the capacity to manage it, operate it, fund it ourselves. So we went into a joint venture agreement with a company called BML Ventures. BML Ventures effectively become the owner-operator of the project, and we effectively become a silent partner. Out of that, how it works is BML provides all the working capital facility. They provide the men, the plant equipment, pay all the bills, etc., etc. We toll mill the dirt, and we've been toll milling the dirt up in Coolgardie. Once they've sold enough gold to repay their costs, we split the cost, the surplus cash 50-50. So for Auric in 2023, there were 9,700 ounces produced, average around 3,000 bucks an ounce. Total gold sales 30 million, total profit about 10. So Auric got cash of 4.76 for no risk. In 2024-25 to date, we've produced 17,600 ounces. Our average gold price, of course, has gone up. So our revenue is about 70 million. At this point, Auric's received a cash distribution of $8.1 million, and we believe that there's another 3 to 4 million to come from the balance of the sale of the rock down at the Rompad. So our estimated cash to Auric in this year is somewhere between $11 and $12 million, plus the 5 that we got there, so it's somewhere between $16 and $17 million. That's our share of the pot. Our total cash cost to get in this project is $1.5 million. So in 4 years, we've turned our investment of 1.5 into $17 to $18 million. The next project that we're going to go on to is the Munda Gold Deposit. We bought this project off Estrella Resources, again in September 2020. It's a far bigger deposit. Bit more complicated, bit more mining required. We've just completed a grade control drill program. We've drilled it now on a 5x5 grid pattern. All these holes down here, you can see where we've drilled. So in 2023, 2024, we drilled 11,300 metres. This year we've drilled 14,600. So we've drilled 26,000 metres of drilling to understand this resource. Where are we at this point in time? We're waiting for our mining approvals. They were submitted on the 16th of December. The WA government says that they've got a 30-day mandate. We're here on the 6th of March and they still haven't come through. But they will come. We've employed the relevant people. We doubled our workforce on the 3rd of January. We moved from 5 people to 10 people. We've employed 2 mine geos. We've employed the mine superintendent, and we're ready to go as soon as we get the final mine approvals. We will toll treat this project. Again, we will toll treat that either back in Coolgardie or more likely in Kalgoorlie. So the starter pit, as I said, is our largest project. It's got a resource of 145,000 ounces of gold in it, so it's quite sizable. We are going to mine the starter pit to understand the project, understand the geology a lot better. 125,000 tonnes. We believe that will produce about 1.8 gram per tonne and produce 6,100 ounces of gold. We're doing our budgets on this basis, that we mine the whole project, get it on the ROM pad, and then deliver it to a mill in either Coolgardie or Kalgoorlie in one slot, and they will process the whole 125,000 tonnes in one slot. In reality, we hope to do 2 slots. We hope to do one in July/August and another one in September/October. So the life of the starter pit is around 5 to 6 months. So we intend to have it finished in September, October this year. You may have seen, if you've been following our story, we've got an option to purchase the old Burbank's gold plant at Coolgardie. Please don't think of it as a plant purchase. It's an opportunity. The Burbank's plant was used by Ramelius for the Wattle Dam deposit, and really it's sat around pretty vacant for the last 10 to 12 years. So our cost to buy it is, the contract is $4.4 million. It's been extended a couple of times because they haven't been able to complete the necessary requirements with DEMIS and DEMERS for us to be satisfied that it is compliant. But in reality, why are we buying this? We're buying this for an opportunity. We're buying the power, the water, the permits, the granted mining leases, and its location. So if we didn't proceed with this and we wanted to build our own mill from start, we're knocking somewhere between 4 to 6 years off that design process time by doing this acquisition. So we believe $4.4 million is credible. We believe that the electricity alone is 15 Ks out of Coolgardie, 3-phase power, 2 transformers on site. We believe we're buying at least the electricity. We just recently completed a contract to buy these tenements from Loaded Dog, 8 exploration licences. We signed that contract on the 24th of February. The reason that we bought these projects is, you can see there is the Higginsville gold plant that's controlled by Westgold. The Trident deposit there is most probably one of the largest gold mines in this area. The Loaded Dog tenements are these brown ones. So you can see these tenements in particular are of high interest to us. You can see all these dots here are the Westgold/Kayora gold deposits. And you can see here that it's got some pretty good grade and very low, right? 22 metres from depth, 28 metres from depth. So we believe that we will be able to expand on these 2 tenements quite quickly. We've also just entered into a contract to buy the Lindsay's Gold Project. Lindsay's Gold Project is about 50 km northeast of Kalgoorlie. It was mined back in 2012 and 2013. The gold price at that stage collapsed down to about 1,235, 1,265 bucks Aussie an ounce. So we bought this project, or sorry, I need to rephrase that. We've still got it under due diligence at this point in time. There's 8 tenements, including 3 granted mining leases. So it goes back to our premise at the start that we would buy projects that we could monetise. Jeffrey's Find was on a granted mining lease, Munda's on a granted mining lease, as is this project. So we believe there's potential near-term open pit gold mining in there, and our total purchase price is $4 million, $2 million in cash and $2 million in shares. $1 million of the shares are escrowed for 6 months and $1 million of the shares are escrowed for 1 year. We haven't concluded this project. We're under a 45-day due diligence. We executed the contract on the 27th of February, so we will not be settling on this project till end April at the earliest. So Auric's plan for 2025, we're pretty aggressive, we're pretty ambitious. We're all getting a bit old, so we need to keep the foot on the accelerator. So we intend to commence mining operations in Munda in Q1, Q2. Mine 25,000 tonnes of ore. We believe it will get dealt with at the Lakewood Mill in Kalgoorlie. That was owned by Westgold, that's now just been in the process of being sold to Black Cat. We'll complete the Burbanks acquisition. Again, don't consider it a mine, it's an opportunity, a plant, sorry, consider it an opportunity. We'll then start to work on what we need to do to get that plant into operation in 2, 3, 4 years' time. We'll complete the Lindsay's acquisition and we'll expect to mine that in Q3, Q4 this year. There's 60,000 tonnes of ore still down on the ROM pad at Jeffrey's Find. We've now got a slot with that to go through the Focus Mill in Coolgardie starting around the first week of July. That will punch out, we believe, a further cash distribution to Auric of that $3 to $4 million that I spoke about a bit earlier on. Our exploration targets are now both at Spargoville and at Loaded Dog. So we've got a busy year ahead of us. We've got lots to do. We've got good cash in the bank and we've got good management to deliver on our strategy. So what is our vision and our strategy? We're going to remain gold focused. You won't see Auric doing anything other than gold. We're going to stay in the same location where we are, all between Kalgoorlie and Widgie-Maltha. Enough in that area to keep us very busy. We're going to have a rapid growth strategy. Why? Because of the gold price. I think you've got to go when the price is red hot, and at the moment the price is red hot. So we intend to be, within the next 3 to 4 years, totally operational, a long-term gold producer in this region of Western Australia. There's our compliance statement for the people that want to go back and have a look at all our announcements. There's our forward-looking statement for the people that have got nothing better to do with their lives. And this is the Golden Eagle nugget, which is not quite the same nugget that Vertex has done, but this is the largest nugget found in Western Australia, and it was found at Widgie-Maltha, about 3 k's up the road from our major operation. Thank you very much.
How good is that? Gold price. Every one of those pits around Western Australia that was dug in the late 90s, around the 90s, is just open to go back and get some more out of there. They've got all the trucking contractors sorted out. You can hear the sophistication in the contractual arrangements, how they split up the money. I've been over there and had a look at it. I think we're going to see a lot more of this, going back, getting deeper, discovering more. Great story, and of course, I'm not sure it's in the dictionary, but monetisation means making cash. Talking about making cash, please make welcome Alex to tell us the Barton Gold story.
Thank you, everyone, for coming out. Thank you to the Sydney Mining Club for inviting me. It is an honor to be here. I do not have any giant legendary nuggets from my ground, so I'm really sorry. I'll start by apologizing and tuck my tail and go away. We'll just make one up. We'll fake one, exactly. Just melt some stuff together. Look, Barton Gold, who are we? What are we doing? Why do we care? Why do we think you should care? We are a pure play gold developer focused in South Australia. And South Australia is a very interesting jurisdiction for a number of reasons. One, it's very friendly to mining. Two, it is the home of the Central Gawler Craton, obviously very well known globally. And what we have gone and done is consolidate pretty much every significant historical exploration and production gold asset in Central South Australia. So if you drive up the Stewart Highway, you turn right, you're in BHP land, you turn left, you are now what people will in the future refer to as Barton Gold land. We've got about 5,000 square kilometers of tenements. We own the only gold mill in the region. And our strategy has been to step back and build up a much larger platform to develop a much larger, longer-term base of operations, first leveraging that existing infrastructure. So it is a staged approach. We focused on building up our Tunkillia project. We've just put out a resource upgrade for that, taking it to 1.6 million ounces and freezing that resource for a large-scale production study. We're now looking at our stage one operation, so looking at turning on our existing mill, utilizing the mineralization around that mill, start operations, start cash flow while taking our Tunkillia project through to development approvals and construction. So really what we're aiming to do is to achieve a large-scale result, 150,000 ounces per annum, by starting with a relatively low-cost move into operations, leveraging that existing infrastructure. The three key things that we are looking to do in the first half of this year, 2025, is to complete a resources upgrade. We just delivered that on Tuesday morning. We'll be delivering an optimized scoping study for this project in the next couple of months. And then in parallel, we're going to be setting out the options and all the Lego pieces that we're going to put together to turn on our stage one operations and make a move into production from 2026. Our capital structure is pretty straightforward. We IPO'd about 3.5 years ago. We had about 176 million shares then. We have 218 million shares now. We've done very little in the way of equity issuance. Part of that has to do with the fact that we have taken the assets that we have and worked them very hard. So we monetize our assets. We sell everything from scrap metal to scrap copper. We produce gold concentrates. We dispose of stuff that's junk to us and treasure to others. We have a number of additional opportunities to keep doing this, but the idea is that we have managed to generate about $12 million in net additional cash internally while doing very small capital raising that we run internally. And so we've managed to protect our shareholding quite a bit. We have a market capitalization sort of in the low 60s and enterprise value in the mid 50s with about $9 million in cash. And we have a really, really tight share register. So this is a register that's really consolidated around really strong board and management alignment. Board and management own just over 20% of the business, but it's just this steady, consistent, low cost, low dilution progress. So we've seen the institutional holding of our register consolidate to around 30%. We've got another nearly 30% in the hands of high net wealth and institutional investors. And then the retail component is about 20% of our register. But importantly, this was a completely clean company when we started it. So this is not anybody who was in a biotech stock just waiting for liquidity. The only retail placement we've ever done was our IPO 3.5 years ago. We had 500 retail shareholders then. We have 2,000 retail shareholders now. So everyone's coming in on a long-term supportive story. And whenever we do raise money, we make sure to respect the retail shareholders. We do our retail issuances by a share purchase plan, and we are always heavily overbid for those by our shareholders. So we're very grateful for that support. When we talk about the capital structure, the human capital really is the most important component for us. We have a team that's collectively got in the leadership ranks over 300 years of experience exploring for, permitting, financing, building, and operating major mining assets with a very strong pedigree in gold and South Australia. So about half of my leadership team hail from the former Normandy Mining, which many of you will remember as the largest gold producer in the Southern Hemisphere. They were acquired in 2002 by Newmont as a 2.5 million ounce per annum producer. So we've got a lot of really relevant expertise. ranging everything from geology to metallurgy to finance to operations. And this is the team that is now going to take us forward into development and operations. So I talked about this two-stage approach. What we have been working on doing is building up 2 platforms. And we have focused on, for the past few years, well, no one's been excited about gold equities at all, building up a large-scale future with our Tunkillia project. So we have taken this from a 500,000 ounce asset up to about a 1.6 million ounce asset. And the idea was to establish something that provided a long-term destination of scale that people could get excited about, particularly when we go and start our stage 1 operation. So our stage 1 area of operations is based on our central Gawler mill. This is adjacent to the old Challenger gold mine. Many of you will remember that, developed in 2002 by Dominion, run very, very hard in a period of much lower gold prices. And around this, we have a whole bunch of interesting stuff. We have remnant mineralization and underground mineralization in that mine, which we last put a resource statement out on in 2020. We're going to go back and have a look at that, but we also have low-grade stockpiles. We also have existing open pits that we can go and take additional material out. We even have historical tailings that were being produced when the head grade through that mill was 8 to 10 gram per ton. So we've got a lot of stuff that we can put through that mill with a very simple, low-risk, low-cost step into operations and just start generating cash flow, leverage that infrastructure, start producing cash, building our bank balance for 2 or 3 years while we're taking Tunkillia towards development. Now, the reason we're focused on Tunkillia is really the economies of scale. So this is an example I use, and I'm sure many of you will be very familiar with Capricorn Metals, but we were very, very lucky when we were doing the due diligence on our Tunkillia project that right about the time we started doing that diligence was when the time Capricorn started doing some pretty heavy drilling on their Carlawinda project. So we were getting kind of in real-time data dumps from what they were doing as we were breaking apart the data on this asset. And we started to see some analogies in the data. So we ended up acquiring our asset. Now, they bought their project as a 650,000 ounce asset back in 2015. Then they grew it to 900,000 ounces and 1.1 and 1.3 and 1.5 million ounces. And then they focused on studies to develop this at scale. Obviously, that is a team that specializes in low-grade bulk open pit operations. Mark Clark and his team did Mount Rodden for Equigold. They did Duketon for Regis. So they started looking at economies of scale there. Now, they've since grown this to a 2.2 million ounce at a 0.7 gram per ton resource, and people will obviously always reflexively say, but it's so low grade. To that I say, yes, but it is one of the lowest cost gold producers in Australia regularly. So they're running at about 4.5 million ton per annum, producing 120,000 ounces per annum at under $1,500 Australian, and they've just announced a $130 million expansion to add 30,000 ounces per annum. So that is really a case study in the sort of the benefits of low unit costs, high unit margins. We acquired Tunkillia after watching this in the end of 2019, early 2020. As a 550,000 ounce asset, we have since grown it to 900,000 and 1.1 and 1.3 and 1.5, now 1.6, and published a study demonstrating that it too works with efficiencies of scale. The reason for this comes down to essentially the geometry of the geology. So Tunkillia's mineralization is large-scale, bulk, continuous, open-pittable mineralization on the western margin of a shear zone in very convenient, boring geology that otherwise doesn't inject messy things into our metallurgy which cause recovery problems. So we've grown this and sort of demonstrated that the gold endowment here is much larger than historically understood. Our study indicates that this can produce about 130,000 ounces per annum at a very attractive all-in cost. But that was a pretty robust conservative base case, which we are now running through optimization, and we've got a lot of exploration potential along the shear here. The initial scoping study was really designed to do one thing, and that was to test and validate our premise that this can produce very efficiently at scale. So we kind of put a dart in the dartboard at 5 million ton per annum and said we forced the mine and the mill to run at 5 million ton per annum. And what that gave us was 130,000 ounces per annum of production at an all-in sustaining cost of $1,917 Australian per ounce, which today, globally and in Australia, makes you a bottom quartile cost producer if you're in operations. But we kind of did that as a pretty rough test. And what I mean by that is we were quite rough on the asset when we did this. So the best way I can say to say this is we sort of made it wear ugly shoes and made it dance. We made the assumption that the ore was anywhere from 30 to 60% harder than it actually is. So the bond ball mill work index of our material is between 15 and 21, and we said, no, it's all Boddington hard. We're going to model it at 26 bond mill work index. We then only single stage crushed it to 150 millimeters, and then we basically sag mill it all the way down to 75 micron. So we created one of the most energy intensive ways we could possibly mill this material down to 75 micron, and it still worked that efficiently. So what we've now gone and done is additional comminution test work. We're actually bringing forward a lot of pre-feasibility analysis. We've modeled multiple different comminution circuits on different ore types to different grind sizes. We've looked at power costs, power mix, and we've identified a number of opportunities to dramatically reduce the energy consumption in this project. And what that will do is push those savings over into CapEx to lock those savings in, and over into the mine design to expand the mine design. We've also drilled underneath the deepest part of the pit and de-restricted the pit floor. When we ran last year's study, we actually, the mine pit actually ran into the bottom of the block model, which was a little bit of a surprise. A lot of the efficiencies and a lot of the returns that we get out of this are so a 40% equity IRR and a 1.9-year payback, even though we were only using 60% of the resource at that time, come down to sort of the geometry of the geology. When you're looking down the main body of the mineralization here, what you're looking at is very broad, very bulk mineable mineralization. So our fresh ore is pretty subvertical. We have very competent footwalls and hanging walls, and we've got 80 to 100 meters in mining width. So very broad, very bulk mineralization. And if you look at sort of the profile of our mineralization, all of our resources are within 300 meters of surface, but 80% of the tons in grade are within 200 meters of surface. So there's a slight bias to shallow in the mineralization and economics. And in the center of the deposit, one of the first things we did was validate our theory that there's this higher grade zone. So you can see here where you've got 80 to 100 meters of mineralization. You've got about 10 to 30 meters of mineralization where there are multiple phases of deposition, multiple pulses of gold deposition, and it created this sort of vein swarming effect. So there's higher grade quartz-hosted nuggety gold and gravity recoverable gold here in the middle. And what it does is it has the effect of pushing up the average grade in the middle there. It's really ideal for a starter pit. And the effect of this is that we have a really simple model where we have sort of a starter pit approach that accelerates forward quite a bit of early cash flows. Last year's scoping study modeled at 5 million tons. The first 5 million tons produces 180,000 ounces of gold instead of 130,000 ounces of gold. And what that means is essentially at a fixed operating cost of a 5 million ton per annum plant, your cash cost of production is around $1,250 Australian. So you get sort of a 1-year, $400 million payback of your infrastructure. That's obviously very attractive from a financing model. The optimizations that we're doing in the ongoing optimized scoping study will accelerate forward more of the oxide ore that's coming through softer, cheaper, higher recoveries. So we would expect to see our upfront mining producing even more, possibly closer to 200,000 ounces per annum for a year or two, and spread this out into more like a 40 million ton, 8-year style mine. When we move into feasibility studies, we'll look at further optimization tweaks. And everything that we've looked at is just in that little green box on the shear zone there. We have some very interesting geology coming together here. To the east of us, that is where you get these sort of IOGC style of mineralization. We see indications of base metals on that eastern margin. But happily, on the western margin, where we've got the St. Peter's sweet granites, it's very boring. We have very, very clean gold and silver metallurgy. We don't have any indications of copper to steel cyanide from our processing circuit. So it's a nice, simple development for us. Just to the north of this, we actually have an historical gold field as well. Everybody's got to claim at least one in Australia. Tarcoola is where high-grade gold was discovered in the state. Quite literally, people crossing the state to go to Western Australia in 1893 stopped next to a hill and started mining quartz veins sticking out of the surface there. So they were mining at 30, 40, and 50 grams per ton there in the late 1800s and early 1900s. 100 years later, a mining lease was put in place around a cluster of those stars. All of those stars there is an historical gold mine. There's about 600 of them on our mining lease and neighboring tenements. And a small open pit was dug there. But we've been really focused on not just that pit, but trying to work out what's the model that fed all of this high-grade gold. So the pit itself there is pretty interesting. The geology here is more complex. It's shorter, folded and faulted than we have at Tunkillia. But we've added about 20,000 ounces of gold just to the immediate pit floor there. The pit's quite shallow. It's about 60 meters deep, 400 meters long. We've drilled additional mineralization that we haven't yet classified to JORC. We've modeled additional mineralization that's unclassified as well. So this isn't going to be a 500,000 ounce pit, and we don't need it to be. 30, 40, or 50,000 ounces out of this will be a very attractive contribution to our existing mill where it previously produced, or going down to Tunkillia to blend and create more of those really earlier year style high returns. And we're starting to now look at the surrounding area at Tarcoola. So the Perseverance mine, that high-grade pit, is circled in orange there. We have spent, while building up Tunkillia, the past 2 or 3 years developing a new geological model to work out where is all this high-grade gold coming from, where does it track from, and is there something bigger going on? So what we've identified is a few dozen structures that are analogous to the one that created that high-grade pit. We've drill tested a few of those. We validated a few interesting, I will say discoveries, but we found a few interesting high-grade gold occurrences. Tolmer has turned into something really interesting we've started drilling on. That's a series of both high-grade gold and silver intervals in a relatively contained area. And so for us, what we're really focused on this year, again, taking it back to the beginning, is we have come to the point now with our Tunkillia asset where it is ready to move into a pretty clear commercial track, and the market has now risen up to meet our other existing assets, our stage 1 platform, where it is now really attractive to hit the green button and exercise the option we have with that existing mill. During the next 3 to 4 months, we are going to be completing an optimized scoping study, which will set up a very tight, well-defined short trip to a completed PFS to support a mining lease application. And in parallel, we're going to be coming out with a series of announcements and results and sort of technical work. We're going to update all of our resources around that central Gawler mill. We're going to be doing a lot of additional geological exploration, a lot of metallurgical testing, and we're going to explain to the market, these are the blocks that we are going to use. This is how we're going to put them together, and this is how we're going to start operations in 2026. So again, for us, really by the end of this fiscal year, we want to be able to come to the market, land both of these aircraft, so to speak, and say, this is now our 15-year trajectory to move from 0 to 20 to 50 to 150,000 ounces per annum, and it's only going to cost X dollars, and that X is not going to be very much. So we think we've got a pretty unique platform. We've got a lot of infrastructure that we can leverage. Obviously, we are now sort of looking at crystallizing that pathway to production, and we have an excellent team to deliver this. So thank you very much for your time. I am certainly happy to answer questions when Julian wants me to.
Wonderful. How good is that? How smart are Australians at mining gold? 3 great stories. Well said. And if I was Molly Meldrum, I'd tell you to rush out and buy all 3 of those stocks. Do yourself a favour. How good, eh? I mean, really, you could just take a bit of each one and you could be smiling, wouldn't you? We've got time for questions, and then we've got some very special gifts to give to our speakers. But if we've got any questions, we can... Lovely Isabella's up back there. Anybody wants to lead off? We've got one down here. Yeah, good.
Just a last question for the last speaker.
Well, why don't we just get all the gentlemen up here, and come on, boys, get up, and we'll have you all put you on show all over again. There we go. I'll name your target and fire away.
Andrew, you didn't mention Challenger at all, and I've had the privilege with the chairman of the meeting tonight to go down to the bottom of the Challenger mine, but you didn't mention that. So is that somewhere in your forward plans?
Thank you very much. Thank you for that question. I have had the privilege to go to the bottom of that mine as well on a high speed on dirt bikes with my insane exploration manager. So that mine is an interesting opportunity, obviously. It's something that has been, true to its name, quite challenging. The mineralization there is highly folded, and the trick is to, mine the apex of the best hinge there and focus where mineralization is really mobilized. Obviously, with the gold price coming up to a certain level, it's much more attractive to consider going back into that mine. You know, we were really interested in bulk open pit mining, right? There's obviously people who specialize in one discipline and others who really excel in the other. There are a number of areas in that asset where shallow mineable mineralization was left unmined because there was not a practice of backfilling waste and paste filling tails back into the underground there. So when we are looking at things like perhaps tailings reprocessing, in the back of our minds is also the option to paste fill back in the underground and actually open up mineralization that was left unmined. It's something that we are starting to look at very closely. We're going back to the original data to look at what mineralization is there, what remains unmodeled, what remains unclassified. And what we probably would be looking to do is actually to work with somebody who does specialize in underground mining and wants to take that risk of exploration and development, where we can obviously provide processing capabilities, marketing capabilities, trading capabilities, and even financing capabilities. So we are starting to look at that, and that will be something I think figures into the medium-term picture for that asset.
There we go. Got 3 questions over here.
Okay, so
He's got a list.
Yeah, no, beat him to the punch.
just my usual 3 for Vertex. Does everything come
For
out of the
Vertex.
adit? It's the first one.
Sorry.
Does everything come out of the adit?
Yes.
Is your development still 2.4 by 2.4?
Yes.
And what's your initial target production at 30,000 tonnes a year?
No, 30,000 ounces a year is our target production. So our tonnes mined will be circa 80,000 tonnes for 30,000 tonnes. So for 30,000 ounces. So we are really permitted on our sand stack. So the ore sorting lets us mine a lot more to get more gold. In fact, what that means is that we can go up to mine 300,000 tonnes and get to 100,000 ounces and still use the same plant we got. At 30,000 ounces, we're only going to be on a day shift only, not even 7 days a week. So the capacity of the plant with the ore sorter means we can do up to 100,000 ounces, but we're going to be mine constrained to start with until we get.
All right, and
All right.
just a couple
Hang
of...
on, that was 3, Keith. What's going on here?
Just a couple of Auric. You know, can't let
4?
them feel as though they're...
You must be getting
they're
old,
kind
mate.
of
What's
like,
going on?
being left out. So as far as Auric's concerned, what's happening at Spargoville? And what happened at Jeffrey's Find? Why did you stop?
What, everyone gets 3. What's going on?
So I'll start with that. I'm an accountant, okay? So bear that in mind. So Jeffrey's Find, the ore was held in a banded iron formation. When we did the RC drilling, we knew that it reached a finite point. So it was always modelled to have around 48 to 50,000 ounces of gold in it, and we've taken 30. So it's the end of the day for us. Trucking, we're trucking at 210 Ks, okay? So if you had a mill right next door, yes, you'd mine more, but you need $100 million to do it, okay? So we're just finishing up now the environmental work, starting the rehab work. As far as Auric's concerned, Jeffrey's Find is finished, okay? Spargoville is most probably our first or second exploration target. Now with the loaded dog tenements, we believe that those 2 are our main exploration targets. We did a pretty big program there last year. We got some good results, and we just need to go back and do further work. Thank you. Pleasure.
Great. Okay.
Alex, on the Gawler Mill, what refurbishment is required and how much?
So the extent of the refurbishment's really not too much. We actually took the gravity circuit down from the cyclones down to the gold room. Part of that was because we recognized that the gravity circuit there was originally quite underbuilt relative to what was going through the mine. Part of that was because we knew we could pull about $6 million of gold out of it, and we were going to do it eventually anyway. So that paid us back about 15 to 1 on that work just to pull it down.
So I don't know if you missed that, but there was actually a very clever purchase, because there was, when they went and they bought this mill, you underplayed that card a little bit.
Yeah.
When they bought the mill, how much gold was left clagged up inside the mill when you?
There was about 15 tons of high-grade concentrate between the cyclones and the gold room. On the due diligence trip was interesting. I was caught hanging upside down in the bin above the intensive leach reactor, and I could see on the outside of the bin what looked like a clean bin was actually about 5 or 6 centimeters of 30,000 gram per ton material sitting in the bin, so I knew it hadn't actually been cleaned out, notwithstanding the mill manager's report. When we bought that, we bought some small high-grade stockpiles. We obviously knew the sort.
So the plant had $10 million worth of gold in it?
Yeah, about $10 million worth of gold in it.
How's that? How sneaky is that, eh?
And
You got to give them
it's not uncommon, so be alive to that when you're doing your due diligence. So look, the answer as to what will be required will come down in large part to what we decide we want to put through it, right? So what are the Lego pieces we're going to use to build this wall? The mill currently has a 600,000 ton per annum capacity to it. It was originally a 200,000 ton per annum plant. So it was originally 2-stage crush to a single ball mill to gravity circuit and leach. Crushing was debottlenecked and expanded, and a second ball mill was put in place to essentially increase that capacity. So there's a number of different ways we can run this plant. We can reduce capacity, keep it the same, or even increase it by remilling, for example, remilling coarse tailings, using that as base load feed, and then putting in higher grade mineralization. We actually have a team going up to site this week and next to start looking at exactly which options we want to do and what would that cost. But if I had to put a sort of a guesstimation range around the 3 options we're looking at, you're probably going to look at something in the range of $10 to $20 million Australian, where you'd be looking for something like a 6 to 12 month payback on that investment.
Well, how good? How are we looking? Anyone else? Oh, we got, okay, nice one down the back, Piers.
Hey guys, maybe from a commercial point of view, Alex, I'm not sure if you can answer this, but like next financial year, 26 FY, what's your production scenario with margin, and what is it going to mean? I know you may not want to say that, but a good question.
Yeah, look, I mean, these are obviously the things that we're working on right now. So we're doing pretty detailed metallurgical analysis on a number of sources of mineralization. We are doing pit optimization analyses. So when we look at resource estimation, we're running full-blown pit optimizations to figure out what can actually be economically mined, and what are sort of cutover points and various different levels of commercial interest. So this is something we want to be able to estimate far more accurately, but we would be aiming to be producing 15 to 20,000 ounces per annum, sub 2,000 Australian all in. So you'd be in the current gold market targeting a margin of $2,500 per ounce Australian on a relatively small upfront capex. The really big thing that we're focusing on is actually also reducing risk in the operations. So start with the simplest operational startup to process the lowest technical risk mineralization. And once you have it going in cash flow, then you can start playing around with your, turning your knobs and playing with different things and adding additional higher grade mineralization. But it's, we have the benefit of essentially $200 million worth of established infrastructure. So it's a really strong starting point to just get going without having to be too flashy, and then start dialing up, sort of dialing up the volume a little bit.
So, ladies and gentlemen, you got another question?
No, the other two. I was asking a broad question on.
All right, you got to pass the mic along. What was the question again? What's your margin?
Production next year and margins.
What's your?
If you can say that.
Well, that's a tricky one for you, right?
Need to do some mental maths. So we hope to produce 6,100 ounces out of the starter pit at Munda, 16,000 ounces out of the Lindsay's gold project, and then we'll come back and start to do the full pit at Munda in that financial year. I doubt whether you'd get much more. So let's call it 24, 24 to 26,000 ounces of gold. Your margin, seriously, who knows?
So because it's toll treating, I guess it's a different situation. All these guys are doing is, I mean, you started with 1.5.
Oh no, toll treatment's pretty easy. It's $57 a tonne, right? Simple number, okay?
Right.
Trucking costs, pretty simple number, 13 cents per tonne per K, right? So you can work out the mathematics quite simply. Look, the mine budget for Munda, and please don't hold me to it, is somewhere around the 8 to 9 million. So then you can work out some mathematics. At this point in time, the Lindsay's project is, we only executed that contract on the 27th of February, and we haven't even really walked the dirt.
So and they started with $1.5 million. Go and figure that out. Your turn.
Yeah, good question, Pierce. You always ask this one. Look, I'm going to put it this way, because we did a PFS, but the PFS is back when we didn't have ore sorting, when gold price was significantly lower, and we've found a lot of other ways to lower our all-in sustaining cost. But suffice it to say, at that PFS, we were $1,800 an ounce, and we're going to be mining, or we're going to be producing 30,000 ounces for the foreseeable future until we step up to what we feel we're going to get to sooner than later as 100,000 ounces, and the gold price. So, and you're a smart man, Pierce, I know that, so you'll work that one out. Thank you.
That's it. I don't need that. All right, I think we're done. Anyone else? I think we're good. Crazy thing is, we've got a gift going tonight that we always used to give away, and we just brought it back. And Roger in particular is going to love it, because back in 1872, Mr. Haldeman was photographed outside the Sydney Mining Club here, wearing his waistcoat that had the Sydney Mining Club logo embroidered on it, and it gave the statistics of the piece of gold, which was 630 pounds, 4 foot. I never worked out it was 4'9" or 4 foot 4 inches, but it actually makes Mr. Haldeman a pretty short man, but a very happy man. And look what the gift is.
Oh, look, that's fantastic. Can I talk to that? Just because there's a little bit...
I have a feeling I'm not going to be able to stop.
No. I'm a
just
bit of a tragic when it comes to mining gold.
I just can't get a naked flame near that suit, that's all.
But what you see here is what this guy had Mayer's take, who's another miner up there. But this guy was a photographer that specialised in photography, and if you look up...
No, he used to work for us.
Yeah, well, okay. And on here, you'll see there's a little dot above that 4.
Yep.
That's a blowy. That's how good his photography was.
Right.
There's a blowfly on there. So yeah, if you ever go and look up this photo on the web, and it's digitised now, zoom right in, and you'll see that there's a blowy on that photo when it was taken.
It's amazing how much you can learn here at the Sydney Mining Club, isn't it? So well done, mate. No, seriously, we used to give that away, and it just happened that on the night that you came, that we reintroduced this gift. No, we didn't do it for you. I mean, feel special, but not that special. So because the other guys are going to get one as well, and they're going to wonder why. And we always, we used to give it away, and we used to think the motto of the Sydney Mining Club was, think global and act parochial. It was a hill end nugget, right? So gentlemen, you know what you're going to get. It'll go down well over there in Western Australia. Great job, and in South Australia. Across the country, New South Wales, South Australia and Western Australia. Great stories. Go and buy some stock. Well done, boys. Thank you.